Good afternoon, traders. Here's your quick market update covering the US dollar outlook, crude oil, and gold. So starting with the US dollar. The dollar remains broadly weak, but Monday's intraday moves were mixed. The yen strengthened, and the euro was flat, and the British pound slightly weaker, highlighting the dollar's current lack of clear direction. And investors are waiting for updates on trade talks and fiscal negotiations this week. There's some optimism that partial trade deals could be reached before the July 9th deadline, though they appear light on details and fall short of President Trump's push for a sweeping overhaul. Meanwhile, Senate Republicans continue debating key parts of Trump's tax bill, aiming for progress by week's end. And overall, unpredictable trade policy, loose fiscal discipline, and President's continued criticism of Fed are undermining global confidence in the dollar and US assets. Many international investors remain heavily allocated to US markets while underhedged against a weaker dollar, increasing the risk of a sudden shift. So next, WTI crude oil. The oil has fallen below 65, down over 17% from the June peak of 77.8. While this is widely blamed on OPEC supply increase and easing geopolitical tensions, experienced traders see it as a short-term sentiment-driven sell-off rather than a structural decline. And OPEC plans to add another 411,000 barrels per day in August, and Kazakhstan has also exceeded its quota, sparking some short-term panic selling. Overall, global oil demand is set to reach a record of 104.5 million barrels per day in Q3 this year, with spare capacity tightening and OECD inventory still 15% below their 5-year average. And US shale production is also stabilizing due to the capital discipline and higher financing cost. And overall, this sharp pullback looks more like an opportunity for forward-thinking traders rather than a start of a collapse. And last but not least, gold. Gold prices fell early Monday but quickly rebounded, showing strong resilience. A potential hammer pattern is forming near the 50-day moving average, an important technical signal. The 3,200 level is expected to act as a major supportive test, though it is not certain we will see that level soon. Despite last week's sharp drop, the broader uptrend remains intact, supported by ongoing dollar weakness. If gold breaks below 3,200, it could trigger a deeper correction toward 3,000. Still, even without major geopolitical drivers, the fundamental case for gold stays strong. As panic-driven moves fade, the broader bullish trend is likely to continue, making shorts less attractive and keeping a positive long-term view in focus. So overall, while near-term volatility remains, the bigger picture suggests strategic opportunities in oil and gold, and continued caution on the dollar as policy and trade uncertainties evolve. So that's all for today. Thanks for tuning in and trade safe.